In the high stakes worlds of law and commerce, partnerships and understanding are critical, yet gaps remain between these interconnected fields. Join us as we sit down with industry leaders to highlight how collaboration can make impact. This is Bridging the Gap. Our guest today is LaTanya Simmons. LaTanya is an Atlanta native and second-generation risk management professional. As a sports practice leader and private risk advisor with AON Private Risk Management, LaTanya provides expert personal property and casualty insurance advice and advocacy for successful individuals. Executives, entrepreneurs, athletes, entertainers, and family offices nationwide count among the people that she serves. LaTanya specializes in designing comprehensive and competitive programs by understanding each client's unique lifestyle. She delivers customized solutions related to property, auto, collections, and liability exposures. She then serves as an ongoing member of her client's trusted advisor team to preserve their wealth over time. With over 27 years of experience in the personal insurance industry, LaTanya provides her clients the benefit of seasoned marketplace insight and counsel. She also has a passion for diversity, equity, and inclusion, and is committed to introducing underserved communities to the high net worth insurance industry, either as a career or client. She serves as a co-chair of the DEI team of the Private Risk Management Association, whose mission is to advocate for diversity, equity, and inclusion within the high net worth insurance community and all the communities that they serve. She understands that for many, wealth grows over time, and lifestyles may change and become more complex. Protecting the wealth that has been painstakingly earned is just as important as building it. Prior to joining AON in 2019, she served as a sales and risk consultant for Marsh Private Client Services. She has also held senior positions with her family's independent agency and as an underwriter and adjuster for Safeco Insurance. LaTanya earned a Bachelor's of Arts degree in economics from Spelman College and holds the Chartered Property and Casualty designation. She has also earned the Chartered Private Risk and Insurance Advisor designation in conjunction with St. John's University School of Risk Management. Please join me in welcoming LaTanya Simmons.
Thank you so much, Gianna, for having me.
Thank you. Sorry, I double-clicked the mute there. Thank you so much. Impressive background. Thank you for taking the time out to want to educate us on how we can properly manage our wealth. So
Absolutely.
Today's show, we're going to go through your special designations and then also some tips to help wealthy attorneys figure out what to do with all that moolah. Okay, so we're going to start with the first segment. Chartered Property Casualty Underwriter, CPCU. So if you're like me, you had no idea what that is, so I had to Google it. And so a Chartered Property Casualty Underwriter is a professional designation identifying an individual who has satisfactorily completed 8 national examinations covering various phases of property casualty insurance and met industry experience and ethical requirements. So CPA, what CPA? You had to take 8. Now, is it like the CPA where if you don't pass each section, you have to start over?
Not quite. You do have to retake that section. So in total, it could take you about 5 years to go through the entire course load of the CPCU. So I guess within the insurance industry, it is equivalent to, let's say, an MBA, or for a financial advisor, a CFP. So it does just kind of recognize you as someone that is definitely committed to this industry. It's not something that you decide to wake up one morning that you want to do, and now you're off to the races. That it does show that you're really looking to, really educate yourself on a variety of different topics, from commercial to legal to actuary, and give you a really well-rounded view of the industry as a whole.
Wowie. Okay. So, in collaborating with attorneys on insurance and risk issues, what skills or gaps do you often see?
I think there is definitely room for closer collaboration. I think with attorneys potentially creating tax entities like an LLC or a trust, or that really changes ownership of the property, but sometimes there's no conversation with the risk advisor to make sure the new entity that the attorney has really been strategic in creating that it has coverage. I think often also attorneys really focus on their legal expertise. And again, that makes sense. Well, they should. But I think there's room for them to really look at their clients holistically and not just their legal needs. Often clients know that they don't know and they're looking for that support. So they may lean on, their attorney if they're making a large purchase or they decide to get involved in nonprofit, but often they don't consider the insurance implications or what that can put them at risk for. But the attorney has the ability to have kind of that insight from a legal perspective. So they can give, just really some advice as their client changes over time and gets involved in more things. So I think there's really an opportunity for risk and legal to really work in tandem and hand in hand. The attorney may be the first person to know of a change in a family, whether it be they're getting married or they're creating business or, even a disruption in the family of some sort or the sale of an asset. So that's information that, a risk advisor would really want to know and need to know to support their mutual client. And, even if they're, in some sort of transition, that can help the whole thing go so much more smoothly if all the advisors at the table are communicating with one another. So I think just really understanding and looking at their client as a whole person versus just a legal type of opportunity.
Yeah, thank you for that. We want to have more collaboration, so that way we can prevent any issues, right? An
Mhm.
attorney has passed the bar, but they have not taken 8 national examinations covering various phases of property and casualty insurance. So they do need to lean on LaTanya to make sure that they're covered. So walk us through the typical process of how you would assess and evaluate risks for a client.
So I think as a property and casualty advisor, we focus on physical assets. So we're not dealing with any investments or financial assets or instruments. So our work centers on uncovering needs related to real property or scenarios where liability may come into play. So that's anything from the property. You may own a house or a townhouse or a condo or rent an apartment. We also deal with the auto piece of it. So whether that's a daily driver car, a lot of our clients may have exotic vehicles or collector cars. That's still within our wheelhouse. Typically, our clients will have a passion for something, whether that's fine art or jewelry or wine or sneakers or even sports memorabilia. So there is a coverage available for that because it is an appreciable asset. Also, we cover ancillary items like an ATV or golf cart or watercraft, boat, jet ski, pontoon. And then lastly, and I think attorneys definitely understand this piece of it, is the liability piece. So we do assess whether there's a need for an umbrella that protects wealth from catastrophic incidents related to the ownership of a home or a condo or operating a vehicle. So that's kind of our wheelhouse in terms of how we look at a client and assess and evaluate kind of the risk.
Okay. And so, where do you tend to identify the biggest risks for high wealth individuals, mainly athletes? I know sports is part of your purview at AON.
Mhm. I think, I guess, a common misconception is that insurance is a commodity, and I think not understanding that all brokers, all carriers, or even all policies are the same, and not knowing when a relationship's been outgrown. And so I think a way to really mitigate that is to review your life changes and your policies annually to see if there's still a good fit. That maybe you may not have outgrown that friendship, but maybe you've outgrown that agent relationship that you've had. So we certainly don't want to disrupt the friendship, but you may need to look at something else to better protect your family. So those are kinds of some of the things that we address. I think another, I guess, big risk is not understanding that with increased wealth comes increased risk. That there does become a point where you have a need for higher limits or a need, to cover assets that appreciate over time, like jewelry or fine art, or even identifying activities that could create open windows. A lot of our clients definitely want to get back to their communities, and they serve on nonprofit boards, anywhere from an HOA board to a large foundation or organization. And sometimes they don't understand that that opens them up personally for risk that they could become responsible for as it relates to that board membership. So I think to mitigate those types of things is taking a really tailored approach, to have the program fit the family. That everybody doesn't own, an exotic vehicle. Not everybody has a nonprofit board membership. So we really try to design programs that fit where that person is in their lifestyle, but it's also flexible enough to change and grow with them. So we don't look at it kind of as a set it and forget it, that it's constantly being revised however it needs to as that individual and that family changes.
Okay. All right, let's move on to chartered private risk and insurance advisor. So, Private Risk and Insurance Advisor Certificate is the only certification program specifically developed for professionals in the high net worth industry. So, in continuing the conversation, LaTanya, and for the services you provide for those high wealth individuals, let's talk about how it blends with the attorneys serving those clients as well. What financial planning blind spots should they be aware of? How can you help cover those gaps?
Yeah, I think the biggest blind spot is believing that successful individuals and their families have their personal affairs completely buttoned up. I think what they don't understand is that often these clients are spending an inordinate amount of time being at the top of their field or their industry, that they never really get around to handling their own important tasks or strategizing for the present and the future. So I think that's why it's important to ask questions, not just at the beginning of a client relationship, but at regular intervals. So whether that's every year at a stewardship conversation, or if you've got a really active client, maybe you need to have a conversation quarterly or maybe even monthly, because things do change over time. And that even if they have the necessary policies, that doesn't mean that they have the necessary coverage to meet the needs of their lifestyle. So they very well have the coverage, but be underinsured. So I think that that's one of the biggest blind spots in terms of helping high net worth individuals. I think another one is overconfidence, that nothing bad or catastrophic will ever happen to them. I think no one plans to have an accident, but clearly they happen. And attorneys are in a unique position in that their career centers on risk and worst case scenarios. So they have the advantage of conveying to the client what can happen based on firsthand experience, that they might have seen the car accident lawsuit that arose from a fatality, or they may have litigated the case of a slip and fall in someone's home. So because attorneys have their clients' attention in that way, their advice is more than theoretical. It suddenly kind of crosses into the realm of potential reality. Now, don't misunderstand. I'm not suggesting that attorneys need to be experts in insurance, but I think there is definitely an opportunity to make an introduction to a risk advisor who can design solutions or even just act as a second set of eyes.
Yeah, definitely. It's just like, being a PI attorney, but you need to deal with someone who deals with compliance and risk and all those
Mhm.
things because that's, what you're focused on daily.
Yeah.
So could you outline the steps involved in a tailored risk assessment and insurance planning process for an affluent client? I know you were talking about asking questions, but I would imagine sometimes these questions are rather invasive and they might feel
Mhm.
uncomfortable, but you need to know so you know
Right.
which policies to recommend.
Right. I mean, I think that we definitely hold privacy, dear to us. So we want there to be a comfort level and a trust that the information that they share with us will only be with us or only be used in the course of trying to find a solution for them. But I think by asking questions, we're better able to understand our clients' goals. Whether it's they have a unique custom home or they're looking to manage, catastrophic scenarios, or they have a high value car, that the more that we know, the better able we are to help them. So brokers like myself work on behalf of our clients, that we don't steer the business. one way or the other, we give our carriers really an opportunity to compete. And each carrier may have their own particular appetite. They may not like homes in Florida, or they may not like homes in California because of the additional risk of earthquake or hurricane. But that's kind of up to us, in terms of understanding our carrier partners and who might be more amenable to a particular risk than others. But overall, we're looking for the most comprehensive coverage at the most competitive pricing. So once we've gathered all that information, we then present the findings to the client, and we start with a view of the entire landscape, that we really want them to see what's out there and be transparent with them. But then we narrow our focus and we talk about who we believe would be the best carrier fit and what coverages we feel would be most fitting to the goals that they've previously shared with us. So we're not pushing them into a box, that we are really trying to match goals to programs that we're designing. And as far as legal counsel, we regularly ask our clients for the contact information for their other advisors, so that we get to know them and they get to know us. And honestly, often our clients are really busy. Sometimes things fall through the cracks. But if we know who each other are, then that way we can speak directly to each other on our mutual clients' behalf to make sure that nothing gets missed. So there's definitely place for the attorney and the legal advisor kind of in this whole risk management, process.
So, what unique risks arise for these athletes and their assets? I know you talked about, over coverage in some ways is better than under coverage, but like, what are the crazy things that are happening? We've all seen ballers and, any given Sunday, right? But like these guys, they do some wild stuff from time to time. Can you talk about some of those unique risks, as an example?
I think, the main thing is the failure to seek risk management advice earlier in your career. Oftentimes, we kind of get brought in after there's a problem. Like you said, this stuff does happen. It's not just pulled from the headlines, it actually comes from somewhere. So if we can kind of talk to them and help them understand that they really kind of determine their risk kind of future, then that's something definitely that we want to help them understand. That certainly your average individual may have some room for error, but oftentimes a high profile individual or an athlete or an entertainer, they live their lives on such a large stage. Usually the thing that happens to them is just as large as they are. So if we can kind of help them contain that earlier on, that definitely works out better for them and for us. I think another risk is, they come with an entourage. So again, another show that's out there. And I think the unawareness of the risk that friends pose to wealth, whether that's driving their cars or live-ins or guests, that basically you're opening up your wealth and your account to these folks. So helping them to understand and be really protective about who they let get super close to them. I think another one is ignorance of implications of reckless social media presence, that often high profile individuals are looking to be influencers, which again, there's absolutely nothing wrong with that. But because they live their lives so openly, the public knows their net worth or their latest contract or the last vacation they went on, or the fact that they are on vacation right now. So we really try to help them understand and curate the social media. That certainly, yes, if you want to share that you went on vacation, absolutely. But maybe not do that while you're gone. Maybe post it after you get back, just so that it closes that window of potential risk. And I think another one, again, athletes and entertainers are known for their jewelry. That certainly they like to wear the jewelry, but we really want to help them understand prudent treatment of the jewelry. Maybe not leave it in the locker room while the game's going on, or leave it in a hotel. Because again, things disappear and these things are typically pretty expensive. So that kind of thing really does happen. And I think the last one is, certainly entertainers and athletes, they work hard and they like to play hard. And sometimes that does involve watercrafts or ATVs or jet skis. So we've definitely seen, the accidents related to either them operating them or their friends operating them. So again, just something that's unique to this particular client demographic are those kinds of, kind of high profile risk and accidents.
Okay. Okay. Let's move on to personal risk management. So, this segment is specifically for wealthy attorneys who are in need of your services. So, how should attorney investors or those with side businesses structure protection of personal and professional assets?
I think that attorneys slash investors should understand that personal insurance is designed to protect you as an individual and your personal activities. And that incidents that arise from business affairs, whether that's you're bringing home work from the firm, or you are in private practice, or any other business that you may be involved in, from a small business entity standpoint, is outside the scope of a personal policy. So a different type of protection may be needed. And I think they're both equally important and they both deserve attention, but understanding that maybe you need two different agents because they have two different expertise or level of expertise. So being open to not kind of looking at an agent as one size fits all, that maybe you do need to kind of parse that out to two different advisors. And I think even understanding that even if the business operates from your home, that there should definitely be disclosure so it can be determined whether a personal policy needs to be adjusted to accommodate the activity. So are you having clients come to your house, or is it strictly just kind of an email, computer, or Zoom relationship? And we know that certainly these days there's a lot of overlap between personal and professional as more people work remotely, or even start, their own businesses out of their home. But I think that's why it's important not to get complacent and assume that, oh, well, I'm working from my house. My home policy is going to cover a business type of entity or affair.
Yeah, and this actually really ties into I had Nico Smith on Friday, and he's a cybersecurity expert. And
Mhm.
even the same things you're talking about, the working from home is what he was talking about in terms of risks, in terms of information security. So it's really great to see that all this stuff really does intertwine, and it really
Mhm.
does matter that people do need to reevaluate their home office situations
Mhm.
because they're most likely vulnerable in several ways, not just from protecting packets,
Mhm.
transferring over a computer, but also just risk and liability from operating, inside the home, which your homeowner's insurance probably definitely doesn't cover that.
Right. Absolutely.
Okay, so what emerging liability risks should attorney investors be aware of as their assets and lifestyle activities grow more complex?
Well, I think you just brought up a really good one, and that's the cyber liability. So that is really a hot topic in the risk management field today. Just that, the dark web, malware, hackers, ransomware, identity theft is definitely on the rise. And because of that commingling, you might be opening your work account on your home email that's not protected by a VPN. So making sure that you got the right coverage that should something happen or should someone get into your accounts and hold it ransom for whatever sum of money, that you do have protection and kind of a firewall should that become a reality. Another one is workers' comp coverage. Often people think that that's only for corporations or large companies, but it is something that individuals can purchase as well if you've got domestic employees, whether that's a nanny or housekeeper, any groundskeeper, lawn keeper, any kind of domestic staff. That protects you from being sued from them if they are hurt in the course of their business. So say you've got a housekeeper that's on a ladder and she's dusting and falls off, that you've got injuries, you've got medical bills, you've got potential lost wages, and a workers' comp policy keeps them from coming after the homeowner personally for that. Another one is special event coverage. A lot of times people like to host large parties in their homes. So certainly, the athlete and entertainer, and sometimes even the attorneys will host, client appreciation gatherings at their home. So making sure that you've got the right coverage if you're serving alcohol, or if something happens, to a client at your home, as it relates to that event. I think I mentioned earlier about being involved in nonprofit boards. So again, um, nonprofits are always looking for professionals that have different skills, and legal skills is definitely one that they look for. So they look to have attorneys on their boards. So attorneys would be wise to get a director's and officer's liability coverage. So that covers their wealth personally as they are working under the auspices of the nonprofit. And then the last one is just having higher liability limits, period, that you don't want to go for the state minimum, that you definitely want to make sure that you're above that. Because again, these days, I think we've all seen the personal injury attorney commercials that those lawsuits can get pretty expensive. So you want to make sure that if you're on the kind of the receiving end of that, that they're not coming after you personally.
Oh, there really is a policy for everything.
Almost.
So for lawyers new to practice, or even newly minted partner at a firm, what financial risks should they proactively plan for? Like I know Tyler Perry said he sets aside about 10% of his income for legal just automatically.
Mhm. Yeah, and it's unfortunate that that's kind of the climate that we live in these days. So on one hand, it's unfortunate, but I think on the other hand, there is just a lot of opportunity for attorneys to create wealth in their own lives. And I think planning early for the accumulation of that wealth over time and understanding that, yes, you may be a law student today, you may move to an associate or a potential partner, but that with more wealth, there's definitely more to protect. And I think, often attorneys see risk in their clients, but they neglect to see it in themselves. Certainly in today's environment, attorneys have the possibility of being highly recognizable in their own right, based on advertising or who they represent, even the media presence that often they're speaking to news crews or they're holding press conferences. So in some respects, they may need the same, if not more protection than the clients they serve. So I think, that attorneys that plan to join firms and pursue partnership should understand that partners are expected to carry umbrella coverage, which then requires a higher home and auto liability limit. Now, the good part is that some firms do offer group access umbrella programs that allow partners preferred pricing, and access to high limits with reduced underwriting just because they are a partner in that firm. And they may even offer that as kind of a hiring incentive that, we as XYZ firm not only care about helping you earn, a really comfortable living, but we're also interested in helping you protect it. So I think that's really a unique feature that as, you're comparing which law firm, to go with, which ones are actually seeing you as a potential client or seeing you holistically as an employee.
Perfect. So now we're going to do a segment for broke people, bridging the gap. So for average individuals without mega wealth, what basic financial risks could they actively safeguard against and how?
Well, I'll say this applies really to everybody. I think the cost of insurance matters, because who doesn't want to keep, as much money in their own pocket as they can. But what's more critical is the value for your insurance dollar. Yes, you could purchase the least expensive coverage at the lowest coverage amount available, but what could it cost you in the long run? So I think that's something really critical that, your average individual or household kind of needs to consider. Also, maybe consider higher deductibles to preserve insurability. That we wouldn't recommend filing a $500 claim if you got a $500 deductible, that you're really not going to get your bang for that whole claims process. So really trying to be wise about your claims, filing. Again, don't try to kind of cut corners, be honest. I think we talked earlier about the question asking, that when you're asked initial questions about past claims history or driving record, it's best just to be truthful. We've seen it all. Don't be embarrassed or shy, because ultimately the carriers will run reports to validate the information you've told us. So it's just best to really kind of disclose everything up front. So I think those are just kind of some really key things that your average individual would benefit from knowing.
So, what straightforward precautions can the average person take to preserve wealth long term, even with modest assets?
I think definitely preserving a clear or near clear driving record. That getting multiple speeding tickets or getting into multiple fender benders is ultimately going to hurt you in the long run, whether it be because you're spending, an inordinate amount of money on premiums, or you can't even get insurance. So that's one thing from a precautionary standpoint. Another one, like I said, is using claims opportunities wisely. Don't just call the insurance company. Maybe get an estimate first to assess whether it even makes sense to file a claim. The next one is, really try to make timely payments to prevent lapses in coverage. Where possible, certainly we try to make payment making easy. Use automated pay plans by credit card or bank account when available, because again, we're all busy. It's not just the wealthy people that are busy. We all are. And sometimes things fall through the cracks. So if you can kind of set up a system so you're not having to manually make sure all these buttons are kind of taken care of, then that's something we would definitely recommend.
So, how can professionals like attorneys and risk advisors make financial planning and insurance more accessible to underserved groups?
I think definitely speaking and putting yourself out there as a subject matter expert. That certainly churches will put on different events to get this message out to their community as well as their congregation, or maybe even community organizations like fraternities and sororities. Again, another speaking opportunity would be trying to speak to groups of young people, or looking for programs through colleges and universities or groups that are focused on exposing youth to life skills and different topics that they will need to know as they kind of progress along. Um, and then, even from a professional standpoint, you could look to speak to different industries of professionals or subsections of professionals and talk to different employee resource groups, that most large corporations have those in existence, and they're looking to support their employee base. So you could certainly talk to different affinity groups, from a legal perspective. So I think definitely trying to, oh, and I forgot, definitely LinkedIn. Absolutely, what you're doing is a great service to the community just by putting content out there, and making it readily accessible to anyone who kind of knows you or comes across your page. So I think using all the mediums, and again, all of those are free. So it doesn't really cost you anything, to connect and network, and then, create and host, a Zoom or a virtual meeting.
And so, for me, I'm not a high wealth individual. And so I never think about what other risks or other, liabilities that I could be getting covered by a policy. And then because I'm not high wealth, I don't feel like I can approach someone of, your caliber. So, what do you say to that person that maybe is a 50,000 a year type person, but they know that they want to get some things going and start building that? How do we effectively get started with like the bare minimum of a risk package? Maybe it's the umbrella you were talking about, but what should we feel empowered to do as middle class Americans?
I think definitely starting with the home and auto, that I think for most families, their home represents the biggest chunk of wealth that they own. So having a conversation, and again, from my perspective, I lead with advice and consultation. I'm really here to educate. So yes, I definitely bring more value possibly to maybe the highly successful individual, but I feel like my true intrinsic value is in the education piece of it. So I'm always open, um, to serve as a resource, really. So I would say for middle class Americans, it would be to focus on that home and auto piece and making sure that that's completely airtight, from a wealth preservation standpoint, because that's really where the bulk of your wealth, is kind of centered.
Now, do you feel as law students we should be worried about risk this early? We're technically covered, I think, under our school to make mistakes, but is there a policy that you can think of that maybe we should get? Like I have errors and omission for the agency, obviously, but
Mhm.
I don't know what else I'm missing as a student just out here being a idiot savant of a lawyer, right?
I think definitely the typical law student is probably renting an apartment. So making sure that you do have renters coverage. Sometimes that can be something easy to overlook because you are housed in a group. But should that building burn down, that your personal belongings need to be protected. So your clothes, your shoes, your furniture, your electronics, that you're responsible for that. So I think as a law student, making sure that your personal belongings and contents are taken care of, and then the auto piece of it. So I think that's probably where things center. Certainly, there's an opportunity for an umbrella if you are, you know, I guess, working and going to school at the same time and very active and on the road all the time and highly visible, or maybe you clerk for a judge and so you get that visibility there. So there's certainly an opportunity for an umbrella as well. But I would say for your typical law student, probably the renters and the auto is probably where you need to focus your attention.
Okay, that's interesting. I would have never thought about, liability if I had a clerkship, of some
Mhm.
sort. Okay. Yeah, have you what do you see happening with that, if you can disclose?
Depending on what that attorney is doing in a clerkship, if they are driving the judge, that could they potentially be brought into a suit um, involving them driving the judge or as a course of their business or anything of that sort. So I think the more tentacles you have in your life, that's where the risks start to crop up. So if you're fairly narrow in terms of, okay, I just go to class and I come home, there's just probably not a whole lot of opportunity there. But if you are probably the more active law student, then you may need to look more critically because that's kind of where problems arise.
Okay. So how can risk management professionals contribute their expertise to causes like economic mobility and equity?
Well, I mean, I truly believe that financial services, risk management, and the legal professions are really closely intertwined and have the potential to really support and affirm each other. Wealth protection is just as important as the creation. So definitely make all the money you can, of course, to support your family and create intergenerational wealth. But often underserved communities, just have access to the basic information or only what's necessary to own a house or legally operate a car or are primarily aware of only the companies that advertise on TV. But there's so much more to consider. I mean, I think risk management professionals can contribute to economic mobility and equity by recruiting more diverse individuals into the profession, especially in the high net worth space, because really each of us serve as ambassadors, and our clients need to see themselves represented in the risk management workforce because I think it just allows for better sharing of information and more understanding of sometimes cultural nuances that exist regarding wealth and money. And I think risk management professionals can proactively seek to work with other diverse advisors so that our message of protecting wealth not just reaches, the group of advisors that they network with, but those advisors' clients. So I think it just kind of mushrooms and goes out from there, you know, because for example, a family is, their home is often their most valuable asset. And if the home is uninsured or underinsured, that could not only have catastrophic effects for that family, but it has the potential to alter the trajectory of their generational wealth. So I think it's really important that we all kind of put that in the center of the work that we do. And we may be having different conversations, but we're all working towards kind of the same goal.
Okay. What financial literacy foundations would you like to see more young people or at risk communities better educated on?
Hmm. I mean, I think that the importance of maintaining healthy credit habits, that leads to a higher credit score. I think people understand, oh, you've got to have a good credit score to buy a car or to qualify for a mortgage, but they may not know that insurance carriers use credit information to derive their own insurance score, which is used as an underwriting tool. So that's kind of a little known fact, but something that I would like to get out more as a foundation of here's another reason why good credit is important. I think again, the importance of pay history, not making timely insurance payments or letting policies lapse and then you have to reinstate or lapse, not only puts coverage at jeopardy, but it could be looked at unfavorably if a lapse happens and then you're trying to get the coverage again. I think maintenance is absolutely important. Poor maintenance could make your home more susceptible to damage. So, for instance, if a roof is in need of repair or possible replacement, when a hailstorm comes along, it's probably going to take out that roof. But the insurance company is going to see that it probably needed to be replaced already. So again, it kind of hampers the claims process or you getting the put back to where you were process because you haven't properly maintained the house to begin with. And again, insurance is designed for unforeseen and sudden accidents that could create a hardship. So often consumers feel like, well, I pay the premium, so I should be able to file a claim. That's my right. Or they feel entitled to that because they, have this policy. But I think what they don't understand is that filing a lot of claims or claims that are just over the deductible does damage really to the insured over time because the thing they don't know is that carriers give you 3 opportunities within a 3-year period to file a claim. And after that, they can cancel your policy. And once it's canceled, it's difficult to hop to the next carrier to find coverage. So it's really something to be preserved and, really held in high esteem to try to keep what you've got, in preserving the insurability.
Yeah, you do not want to end up uninsurable.
Now,
Okay, perfect. Well, I learned a lot today, and I probably need to get some more policies myself, not realizing that there's, an umbrella policy that I probably need, but I feel like my E&O might have it. So I'll have to talk to them about that. Is there anything else that maybe we didn't touch upon today that you would like to talk about? Otherwise, we are at the end of the show.
well, I just want to thank you, Tiana, for having me. I think I'd just like to wrap up our conversation with the idea that insurance is not just a budget line item. It's a promise to make things right when the unexpected happens. And the strength of that promise is not just in the numbers on the page, the premiums, the coverages, but it's actually in the words that people don't usually read, and understanding how broad or how restrictive they are. So I think it's really important to understand whether you're an individual or a family, a currently successful person, or one striving to be. We often focus on the creation of wealth, but the protection of wealth as it's accumulated should be just as much of a priority for a balanced and well-rounded approach. So I think that's kind of my parting thought.
Yep, perfect. Mo money, mo problems. Call LaTanya. See, look at that. It's a jingle. And so LaTanya is with AON Private Risk Management, whose mission is to strive to be the world leader in providing custom risk management and insurance solutions for the protection of accomplished individuals and successful families. Our promise to deliver innovative strategies springs from our commitment to our clients. We empower our team to help clients make smart decisions, which creates a world where people are safe, secure, resilient, and focused on the people and things they love. As you've seen today, Ms. Simmons is very knowledgeable. If you are interested in working with her, here is her contact information. LaTanya, thank you so much. You have probably helped several thousand law students figure out that they've got more problems once they graduate, not just passing the bar, but now they need to figure out additional protections for themselves as they continue to grow and flourish in their careers. I've never heard of anyone taking the time out to explain that to us. So on behalf of all law students everywhere, I thank you. And this has been Bridging the Gap.